Welcome back, and joining me as we unpack the trading day that was is Makwe Masilela from Makwe Fund Managers. Thank you so much for your time, Makwe. Still quite a mixed picture that we are seeing over there. You look at the JSE, it's managed to trade just above the flat line. The US markets are in red, seeming that the post-election rally has faded, but European markets actually high. Is it just the markets at this point really just struggling with direction and exactly what to hold on to and the drivers thereof?
I think the markets, after having such a good rally after the elections, they are now looking for numbers to support that. Remember, so far, that rally can easily tell you that the valuations are overextended. And even before that, remember, we've been having an issue with valuations that are too rich when the central bankers started cutting interest rates, or even before, when we were expecting them to start cutting rates. But I think Europe is benefiting from the fact that they had very decent job numbers. And also when it comes to the economic growth, not too shabby. And back home here, we gave up most of those gains, even though it was not a decent gain during the session, but it was more of a cautious thing. And I think the issue here, we know that we've seen, as we said in our intro, the CPI was in line, the wholesale in numbers as well were in line, and that itself, it gave a boost to that. We should still expect the interest rate cut come December in the US, and back home here, come next week, Thursday, we should get one. But now markets are still looking to get more clues, from the comments or from the speech that will be given by the US Fed chair.
Yeah. Makwe, let's get into some of the JSE companies that came out with numbers today. Telkom coming out with a 6-month trading update today, saying that their group revenue is expected to come within a guidance. But what was quite confusing is their headline earnings per share figures. They said that for reported, it could either fall as much as 5% or rise as much as 5%. But adjusted HEPS could actually rise by as much as 60%. We did see the share price climbing there about 6%. What did investors hold on to here?
More into the adjusted, because it's more of a clear reflection, because we are adjusting those headline earnings per share to everything that you need to strip out the noise that has been there. We know headlines earnings per share themselves, they do that, but also now we have to consider and adjust to that. And the guys as well, we know that they still have some legacy issues, whether it's from the data erosion or from the fact of the fixed voice, but they demand is strong when it comes to their data services, and they expect to see a decent growth coming out of that. And I think so far they've managed to sort out most of their problems.
Well, in contrast, MTN stock fell about 3%. They also released a quarterly update there talking about group service revenue slumping 18.5%. And surprise, Nigeria was the dark spot there. Just contextualize that for us.
I think it was expected, the likes of Nigeria to continue to perform the way they did, but also of a concern that with service revenue going down, as you said, by almost 18.5%. You look into that, what you call it, the only thing that has been up out of there, it was fintech. It was up 19.5%. You look into the active users when it comes to their mobile money, up almost 5.7%. We're talking just over 61 million, and also the transaction value increased and the volumes. I think the value here, we're talking around 229 billion US dollars. And the increase when it comes to subscribers, it was not too exciting, only by 1.6%. They're sitting at almost 288 million users. But I think they did manage to navigate better when it comes to the macro conditions and also regulatory issues, and also the impact or the headwinds when it comes to inflation and currency volatility. This time around, compared to the first 2 quarters, it was not too bad.
All right, so let's go into mining, because Goldfields also came out with a quarterly operational update. I did notice that the share gave up about 4% at some point, but then it did reverse some of those losses, but still ending up in the red, considering also when I looked at the update that production was up double digits quarter on quarter, and also their costs were down. And I'm wondering why the disconnect between the market reaction and actually what they produce. But also I did notice that Harmony Gold was also down. So I don't know if it was maybe caught up in a general negative sentiment on gold or...
Not really, it's important to look on quarterly numbers, but if you look year on year, their production was 6% lower. Yes, quarter on quarter, it was up 12%. And also their all-in cost, we've seen a nice decrease of almost 5%, but their all-in sustaining cost, it was down only a mere 3%. And we know they benefited from higher gold sold, so that at least is a positive for them. The question here is, will this high gold prices continue to hold? And if they do, and they continue to reduce their cost, then they should do better. And generally, even the gold price today was not doing that great.
All right. Let's go into insurance and financial services. General Sanlam also coming out with a 9-month operational update and talking about double-digit growth in their financial metrics. That stock did climb 2%. Is Sanlam just strong in its upward momentum right now?
It is, remember, they finalized that acquisition of Asopol. They've managed to get out of that JV with Capitec, and I think they realized almost 1.9 billion rands out of that, even though that might have an impact to your business going forward. But also you look into their financial services revenue up almost 15%, and you look also into the value of the life insurance, business. I mean, up almost 13%, the volume up 12%. And by the way, they also did manage to benefit from good investment returns.
All right. Well, Makwe, talking about returns, let's get to your stock pick for today. Where are you hoping to eke returns?
I think I'll go with Gold Rush. It's more of a gambling stock. And going forward, the guy looks okay. I mean, they are looking to open more bingos. They are looking to dominate that market. They are looking to grow their online sports betting, as we generally know that has been doing well going forward. And by the way, they happen to be one of the bidders when it comes to the new lotto license. So if they manage to get it, also that will be positive for their earnings going forward.
All right. Well, thank you so much for your time and for your insights there on what has been moving investors' money today, Makwe. That was Makwe Masilela from Makwe Fund Managers.